Hello and welcome to Bankable, the show where we talk to leaders in the banking sector as well as the NBFC sector to try and understand how they are seeing their respective fields evolving over time, the challenges that are facing them, the opportunities that they're looking out for. Today on this conversation, we have Mr. Parag Rao. Now, let me read out some of the businesses that you're handling, which is payments business, consumer finance, digital banking, as well as marketing. So, long list of responsibilities on your head, Parag. I wanted to start this conversation firstly, welcome, but the conversation starts with the credit card market, because for the longest period of me covering banking, I've known you as a credit card guy, so I start with that. The way it has evolved in India, we saw a dip right after the global financial crisis, and then it sort of has been on this meteoric rise, the entire market, and of course HDFC Bank being the leader in the entire space. I wanted to get a sense from you as to what you think the market has evolved as, and maybe look at where it is headed in the coming future.
Okay. First of all, thank you. Thank you very much for having me on this show, and it's a pleasure to always talk to you. Getting down to your question, well, I think you talked about the 08 crisis. Let me put it this way. I think it was a step in the evolution of the category. Okay. That step essentially marked the difference between prior to 2008, where there were the absence of credit bureaus, which means you depended a lot on traditional underwriting methods and no credit verification scores of individuals. Post 08, when the bureaus sort of started getting active, that's when you had much more focused and much more data available on the customer with the score, so that you could take better underwriting decisions. That is a positive step in the evolution of any asset category, because you're using more information to do better underwriting. Okay, so leaving that aside.
Sure.
Post that, I think there's been a significant growth year on year. You've seen the number of cards evolving, especially in the last 5 years. You've seen a rapid growth to close to now 80, 90 odd million cards.
Yeah.
And at the rate at which we're putting on cards as an industry, I think very soon we'll start crossing 100 million, and the next milestone will be probably another 200 million cards. That's good growth for the industry. Credit cards are at the upper end in terms of premium products or aspirational products of the consumption credit cycle, if you may call so. Okay, and so therefore this growth is, I think, good for the economy. What's driving this kind of acquisition? 2-3 things. Prior to the pandemic, if you may call so, with the spurt of the fintech revolution and a huge number of customers, not just in the cities, but also in the metros and rural areas, adopting electronic means of payments. For them, for these people who are now electronic savvy and payment savvy, I think credit cards is the next step, or the aspirational step, if you may call so, for people who would like to do electronic payments. And so you created, even prior to the pandemic, a huge set of customers who are knowledgeable about electronic methods, are now go online and spend, use methods of payment instruments beyond cash. And so the cards is the logical step. So that's one great pool of customers available for future growth potential of the card business. The second, which is much more recent, if you may call so, is the recently announced UPI linkage to rupee credit card program. That, in a step, is one more step, or rather an advanced step, in terms of being able to bring out the potential of, let's say, 350 million customers who today transact on the UPI platform. Albeit a lot of that, or most of that, is about direct to account, so almost the equivalent of a debit card. These people are now going to require credit overlaid on top of their UPI transactions to be able to expand their purchases and increase consumption. And with this electronic seamless linkage, it becomes very easier now for them to apply for a credit card, in this case to start off with a rupee credit card, and then expand their purchases and apply credit on that. Okay, the advantage of that system is that you have UPI, which is anyway a regulated network with protocols and processes, chargeback processes, retrieval processes, etc., all of that in place. You have now credit cards being issued by registered entities, banks in this case, who once again are covered by a huge set of governance, regulatory and compliance regulation. So you now have structured financial products coming together too, the UPI as a payment form and credit card as a means to overlay credit on that thing coming together. And that's probably the next step in the growth of this thing. So you ask me, I think the next couple of years, I think is going to be a good period of time for credit cards as you see more and more customers who are already electronic savvy now asking for, requesting, demanding credit so that they can sort of make their purchases even more seamless. So I think it's a good story for the credit card business in India.
India has always been viewed as a credit shy sort of country, at least amongst the consumers. People historically have not really been that open to credit because credit has connotations of, oh, what if you default and then you lose, your life goes off track, right? That seems to be changing now. Now people are a little more confident with the way they are approaching credit. They are more comfortable with the way they're using that credit. People revolving their credit in time. Do you see that fundamental change in your customer base when you're looking at the way your business is shaping, when you're interacting with the customers? Is that comfort level going up?
Okay, so I would not use the word credit shy. I think we're a conservative economy, Indians by nature, and as reflected, let's say, in one metric, which is common across most countries, is the, if you may call so, credit to savings ratio. Right. India's for many years was in the low 30s and 40s. Okay, and it's only started going up slowly right now. There are many countries where the numbers are even above 100, which means, crudely put, there are a lot of households which live off debt.
Yeah.
I don't think that's where we want to go. Okay, but having said this, I think in the last couple of years, with the expansion of formal credit, formal retail, not just in the cities but also in the hinterland, availability of more goods, brands, etc., services, quick delivery, online delivery, the Ecom space actually has helped in sort of expanding the demand for such kind of products. I think it's only given a reason for consumption to sort of grow. Okay, in that kind of a scenario, I think it is but logical that people would look at safe and secure means of procuring credit at the point of purchase. Okay, and credit cards being one of them, to help not just expand their consumption, but also to, if you may call so, very maturely and as a responsible citizen manage that credit. Right. Okay, so is that a good trend? Answer is yes. Are the kind of regulations and processes and protocols around it good? Yeah. I think it only helps credit grow maturely. Yeah. So it's a good thing happening.
Okay. I'm a slightly more conservative, as you put it earlier, user of credit. I do use credit, but I'm slightly more conservative, primarily because a lot of fears come from the way we see people who are unable to repay the debt, them going through that kind of troubles. My question to you is, as you are dealing with your customer base, how are you seeing people treat credit as now more payments, or is there still that seriousness that, okay, this is still debt, I need to repay this at some point in time? How are you seeing that?
So let me answer a question in a slightly different way. Credit cards are also used by conservative spenders. Right. Okay, we in our parlance call them transactors. These are people who spend on the card and avail of the free credit period and pay on time. Yeah. Okay. And so they're doing it very safely, securely, and there are built-in mechanisms into the product which will nudge you and ensure that you don't go sort of overboard. Okay? Yeah. There's another set of customers who would like to avail of that credit and revolving facility, etc. And those are what we call revolvers. Those, for them too, the same strong measures, nudges, etc. are there to ensure that thing. I think, and credit growth will be a combination of what the conservatives would do, if you may call so, and the revolvers would do. Okay, so in that sense, the credit card construct is a beautiful product which manages, I think, both sets of demands for these diverse customers.
Okay. Coming to since this is a very recent development that has come in, so I need to ask you about this announcement by the Reserve Bank of India with regard to risk weights on consumer finance, and specifically they're talking about unsecured credit. Part of it is also credit cards. Raising risk weights, are we, should one look at it as a doomsday scenario, or is this just some amount of safeguards being built in place? How do you see this?
Okay. I think these are, if you may call so, measures which every industry needs to put in place when you have a good, healthy ecosystem growing at a rapid pace. You'll always see some, if you may call so, hotspots in some parts of the ecosystem. And increasing risk weights is, I think, one of the tools or measures which is used to ensure that you do not have rampant growth and rampant disbursement of loans in certain some segments. So I think so I definitely don't think we should call it doomsday scenario. These are what we call in our parlance regular portfolio tweaks which you do in a growing portfolio to ensure that the health of the portfolio continues to remain the same. Okay, and as you're aware, within the ecosystem there are always cycles of growth, there are cycles of degrowth, so on and so forth. These are legitimate tools used to sort of ensure that you have a healthy growth. I think what's important in a growing economy like India, which is where it's natural when you have high growth
Yeah.
rates in the economy, you will see consumption of credit obviously going up. Okay, it's all the more important to ensure that you put in the right checks and measures to ensure a good mature growth and a very stable growth of this thing, which ensures the economy grows, but at the same time ensure that bubbles don't happen. So these, I think, are routine measures which are put in place from time to time by ecosystem players, by the regulator at times, etc., which only will help the industry grow. So definitely not doomsday day. Should be taken as a business as usual method of ensuring good, healthy credit growth.
Understood. Just a couple of months ago, the RBI released the FY23 household financial savings data. Now, that data showed a 47-year low on household financial savings. You mentioned earlier that credit to household savings, that we are still on the lower side of that spectrum.
At a global level.
At a global level, yes. I wanted to get a sense from you, are fears of excess leverage in India a little overstated?
Like I said, there's no one recipe or one definition which you can apply across all, because like in any economy, consumption, okay, it depends on segment to segment, income levels, stability of income flows, so on and so forth. Different for salary, different for thing. So I think if you ask me, put it this way, yeah, we're still on the lower side relative to many other
Countries.
growing and developed economies. Is there scope to grow? Answer is yes. Should we do it in a mature manner by sort of putting in the necessary ring fence rules and regulation? Answer is definitely yes. Okay, and I think that's what's happening.
Okay, let's leave the credit question aside for a bit. I want to come to the customer side of the story. Recently, the Deputy Governor of the Reserve Bank of India was pointing out that banks are so obsessed with acquiring a customer, they're forgetting that there's a redressal side of the story, there's a customer management side of the story as well. And that needs equal sort of importance. In your assessment of where HDFC Bank is and the system is, and your interactions with customers, what is it that banks are potentially missing and what are they doing very well? Yeah, if you can just tell me these two things.
Okay, so I think the processes are in place to ensure that there are the mechanism is to accept, to ensure that it's ease of the customer being ability to sort of put forth his redressal, multiple channels, digital, physical, walk into a branch, call in, etc., etc. That's number one. Number two, back-end processes which ensure that the redressal of that particular issue happens within defined TATs, timelines, throughout the entire banking system.
Right.
And the third is obviously reverting to the customer. I think those processes are well in place. They are monitored extremely well, not just by the banks, but also as part of our regular audit, which is done by CBCI. There are mechanisms like an internal ombudsman, which every bank needs to have, to be able to relook and have an outsider's view of redressal and the processes and the kind of resolutions which we're giving. So I think the processes and etc. are completely in place. Okay, so redressal also goes hand in hand with education and awareness of customers as to some of the downsides. I mean, you would be hearing of many cases nowadays of the frauds happening, which happen through social engineering. wishing, phishing, so on and so forth. Now, these are larger society ills, which as an industry we're sort of fighting. And we fight it through multiple means like education and awareness of the customer, putting in much more stronger risk rules and risk infrastructure to ensure that technology included, which ensures that spoofing of apps and attempting to minimize the impact of wishing and phishing. And third is putting in redressal mechanisms to ensure that aggrieved customers who may have, say, fallen prey to some of these things, their issues are resolved in even tighter timeframes than the regular call. So all of these, I think, are in place across the banking system. In general, there are always areas of improvement, and we're always in touch and in constant dialogue with the regulator to keep on sort of looking at ways and means. So I think, let me put it this way, in summary, I think there are a lot of measures and processes and controls and double checks put in place to ensure that customers' issues are resolved within tight timeframes. But then it's a constantly moving sort of target in terms of improvement, and I think we'll only evolve from here on.
Okay. You mentioned this new customer base that is evolving, which is a potential base for you to expand the business in, right? When it comes to expansion, now you're already sitting at the top. You probably get the best of the customers out there in the market. But when it comes to expansion, is going at it alone a better strategy than partnering, or is partnering better than HDFC Bank being the big daddy of the private sector industry, doing it by itself?
I think both are required. Okay, you need to determine the kind of mix which you maintain. But for example, our strategy, primarily the bank strategy, primarily focuses on going back to our own existing customers, people who have accounts. We have 80 million plus customers. We have only about 17, 18 million cards. So there's a huge upside to grow even within our own base.
Correct.
So that's one key strategy, and that will always remain the forefront strategy, because we're also a large growing retail bank, and we will continue our acquisition of customers on the retail liability side and asset side. Okay. Having said this, partners are important for 2-3 reasons. One is they may have strength in certain segments which you as a bank may not be so strong.
Correct.
Okay. They also have a set of loyal, dedicated customers to their own product category, which are also, if I may call it, amenable to payments.
Yeah.
Okay. And so therefore, these partners, they also bring to you local strengths. Could be if they're a physical sort of partner in that particular geography or that segment, or if it's an online player, they have a dominance in their particular category from a technology and go-to-market perspective. So these are the kind of strengths partners bring to the table, specific to some segments, which is the reason why you have airline co-brands and so on and so forth. Okay, so our strategy, HDFC Bank strategy, is a judicious mix of both. It's predominantly a bank-owned strategy to our own customers, but we also sort of partner with like-minded, great brands, which have a good loyal base of customers, which help us then get penetration into those particular segments. So it's a mixed bag, and to my mind, both are required.
Okay, I have a payments question now. The advent of UPI over the last 7 odd years and the way it has grown, the next target that people are talking about is 100 billion transactions. You need that, because that's where the growth comes in, and potentially you would have then a majority of the population having used UPI at least once a month. Why? I mean, what is so important about digital payments that needs to absolutely happen? And why not let people use it as they're using it, and it grows as it grows? Why is there a need to sort of push behind this target? I just want to get a sense from you as a banker.
Okay, so transparency, cost saving to the economy. I mean, safe and secure.
Sure.
Okay, digitalization, removing physical processes, so on and so forth. I think these are the top 2-3 key reasons why you need digital. Okay, and especially at a population scale, when you look at, I think the kind of savings, the kind of expansion of marketplaces happening just because you go digital, I think are once again extremely large, and I think the ecosystem is already seeing a lot of benefit of these digitalization things. So I think Having said this, I think still the penetration of electronic payments or digital payments is still very less in the economy space relative to, say, many other economies. And I think there's a good leeway to grow. So it's only good that this growth is happening, driven by consumer adoption quickly. That's one, and also the efforts of all the constituent players in the marketplace in terms of driving, pushing awareness, so on and so forth.
There's a popular meme amongst younger people about them using UPI apps. Is that because they don't feel that it's money going out of their pocket? It's just a number on the phone that's changing, right? I want to guess. I mean, the question I asked you earlier about credit is that gamification? Is that a part of the strategy, or is this just that is how digital works?
Well, I think the primary thing which I didn't mention in your previous answer was this whole fight against cash.
Yeah.
Okay, and I think gamification, etc., just about tools and methods in which you can sort of make the benefits of one form versus the other, I think, more evident. That seems to have caught on, and it shows by the number of new customers sort of getting onto UPI even now every month, and of course the large scale of.
Yeah.
So I think it's a good trend. The inbuilt check, if you may call so, in UPI today is simple. It's money going out of your account, so you're limited to the
amount of amount you can spend.
And in a different way, when you had a cash regime, you were also limited to the amount of money you had in the account to withdraw that much cash. So I think it's only good. And these are methods. These are what I would call tools to aid adoption of new methods.
Got it. Fair enough. Last couple of questions. I wanted to get a sense from you on the RuPay credit card scenario, because it's a card that you mentioned earlier where you said that for this emerging customer base, which may not have a very high income base but are still smart and savvy enough to use a credit card or digital devices to make the payments.
Not just for the guys who sort of who just. I mean, customers like you and me can take a RuPay card and link it to your RuPay account also. Yes.
That's what my question is. Is there a premium category in RuPay? Because it is always viewed as the bottom of the pyramid.
Well, like as in any other portfolio, okay, there are mass cards, popular cards, mass cards, premium cards, and super premium cards. So RuPay, let me say, relative to the other schemes, a little younger in that sense. The other schemes have been in India for 25 to 30 years. RuPay is about 10 years old, okay, and so from time to time, every bank is sort of launching their own products on the RuPay network to address significant things. So, and I think that's happening. So yes, there are products for premium, products for the mass, and for the popular ranges of products available on the portfolio.
Okay. The last question, since I have you in this room, and because this is top of the mind topic, is the central bank digital currency, right? And you're the man at HDFC Bank, sort of driving it. I wanted to get a sense from you as to where we are in terms of the CBDC pilot that the RBI announced last year. It'll be about a year in a few weeks. Where are we at this stage?
Okay. So on CBDC, let me sort of say a couple of points. So one is, people ask this question, UPI versus CBDC. Well, let me put it this way. I think CBDC is a digital currency.
Yeah.
Okay. And so therefore needs to actually be looked at in the context of cash and the properties related around cash and the behavior around cash. That's point number one. UPI is a network. Okay. So they're actually essentially different things. Okay. Point number one. Point number two is there are CBDC in the wholesale segment and CP in the retail segment. Both are pilots which are currently going on across multiple banks, okay, for different use cases. Okay, and those pilots are sort of on. In the pilot, I think the banks are in the stage of having launched, expanded distribution, which means acceptance, expanded the apps required by customers on their phones to sort of transact with CBDC, and building up actually of use cases, adoption cases for customers. So we're in that phase of going. So definitely, I think it's early days to sort of talk about comparisons. But I think all the efforts of the banks put together, I think we're seeing good growth in the transactions happening. Okay. But I leave it at that because it's in the pilot phase as we speak.
All right, Parag, thank you so much for joining us on this conversation.
Thank you. It was a pleasure being on the program. Thank you.